Hey, everybody, welcome to Rogue Radar with Bill and Brian. So, this week we're going to talk about a little bit, and we are going to take a little bit of a development hiatus for next week and a half, something like that. But it is May 31st, and we've already had lots of activity returning from a holiday. Natural gas has gone down again. And going to wait to see where it closes. It did this Friday before Memorial Day weekend, but we've had a pretty heavy sell-off here. We're sitting around 847. 837 is the key level to watch there. Fundamentally, I'm bearish, but I might be in the minority. Crude oil has gone up, and it's gone past a critical point at 116.64. But watching the close is going to be important. We are currently at 117.78. And again, we are not financial advisors. We are here to offer our opinions for perspective. Come see us at energyrogue.com, or if you get bored and you want to read the disclosures, go to the beginning of the video. But let's take a quick look at natural gas fundamentals. We are sitting pretty steady at 95 BCF. On natural gas. Canadian imports still hanging around 5, and the power, industrial, and residential is sitting around 64. Usually this time of year, it's between 60 and 75. So we do have a little bit of light demand, which is injecting us about 11.4 BCF a day as of the latest week. One quick note before I pass it over to Bill. Our rigs keep increasing. We've increased 10% since December. So it is only May, and we've already increased 10% rigs. And we've only seen moderate increases on natural gas. And Bill, what are your thoughts on crude oil?
Crude oil's been interesting just to keep watching it and see how the headlines seem to drive things more than what the actual fact is. So this last weekend we saw where Europe has decided to ban Russian oil, or at least Russian oil, except for what comes from a pipeline, which is how they got Hungary involved. So I'm not sure we have the exact numbers on that, what they bring in on by pipeline. But so they're going to ban Russian oil. So people think that Russian oil is going away. Russian oil is not going away. If there's anything you'll ever learn, is that the market always balances itself. You don't get the chance to change it just because you want to. So that Russian oil is going to go to someone else. And that means it's going to back off someone else's supplies. And eventually this will all settle back to where everybody's doing the same thing. Now, Europe can feel good. They're not buying oil from Russia. But if they turn around and now have to buy from Venezuela, I'm not sure they've made any moral high ground. So,
right.
The oil's going to balance where it's itself. So the other thing is that Russia produces just a little over 10 million barrels a day. That is 10% of the entire world production. So 10% can't just disappear. If you talked about taking 10% of the cars off the road today, that means you would have to take 30 million cars off the road.
Right. These are big numbers.
Yeah, they just, when you do it as a percentage, it sounds small, but when you put it in reality, that kind of stuff's not going to happen, especially as demand is going up and not down. So, congrats on Europe. Maybe, sort of.
Right.
Congrats. But oil is, as long as the demand's going up, the price of oil is going to keep supported. I'm still bullish on oil. I'm bullish on oil, not like my crazy friend, but I'm bullish up to about $140 for sure. But right. I don't know about you and your friends, but me and my friends, I do see some behavioral changes, especially over this weekend when they did. A lot of boats were still parked in the driveways because they didn't want to spend the money on fuel. Yep. So behavior is starting to change, and that's what's going to impact the demand more than what's going to impact anything we decide to do against Russia.
Right.
So that's my thought on fundamentals, Brian.
Okay. Nope, that sounds good. And just to highlight your main point. Your main point is Russia's producing 10 million barrels a day. It is going somewhere. It is being produced. It is going somewhere. And we're not going to speculate on where. We have our own opinions, but we're not going to speculate on that. OPEC only has a limited amount of spare capacity left, and the U.S. is adding rigs. And in that 10% rise in rigs, we've only added at 200,000 barrels a day since December. So
and that's 200,000 versus 11.7 million barrels.
Right.
So it's like 0.2%. Is that what I'm getting there, or maybe just 2%? 2%.
Not even. So, well, listen, thank you for joining us. Like I said, we're not going to be as active the next week and a half, but we wanted to wish everybody a great week. Happy Tuesday. And come see us, energyrogue.com. Talk to you soon.
Bye.